Hello, everybody. This is Noah Rosenblatt. I am from UrbanDigs, and it's Friday, so this is going to be your Week 14 Coronavirus Manhattan Market Update. The goal of this update has always been to track the COVID effect on the Manhattan markets. If you've been listening and tuning into this weekly broadcast, it has always been my thesis that we're going to have three phases of this, and it's going to be phase one, destruction, phase two, normalization, and phase three, recovery. And what that phase two normalization looks like might be different for supply and for pending sales and ultimately for price action. Supply and pending sales are both real-time measures. We could track both of them. Let's take a look right now. Supply came in at 53.72. When I first started doing this, it was at 65.82. You're looking at a chart right now. We reached a low of 5,042 in week 9, and then we started coming back over the last 5 weeks. When I did this last week was at 52.50. So we have seen a gradual comeback of supply. Now I'm showing you the 3-year chart of supply right here, and you could see how this active season is so different. Usually we have peaks and valleys for the 2 active seasons Manhattan has. This year we did not have an active season and sellers wanted no part of it. So that is what this is, the decline of inventory. We have seen a bottom. This is phase two, the normalization and bottoming. If you could say that phase three is starting, it's probably only in the last week or two. But it looks like we're starting to come back here. Now that we're 12 days down and counting, I would expect that to obviously pop, and all those sellers that didn't get a chance to list or did not want to list during the COVID crisis are finally going to put those properties on the market. We should have been around the 7,700 level. That's where we were last year. Again, instead we went down to the low 5s. So there could be a big bounce in inventory as we approach the June 22nd gates opening. So let's keep an eye on that. Pending sales came in at 1809. When I did this last week, it was at 1913. You're looking at a chart right now. When this first started, we were at 2650, and this has been a gradual decline. Pending sales, our measure of demand, is in phase one. That's the destruction phase. We have not yet seen any indication of normalization for pending sales, and you can see that by the chart. Now let's go take a look at this, and let's take a 3-year picture of pending sales. And again, you could see what I mean. Phase one, we're looking for a narrowing of that slope, a flattening of that slope. We don't want to see it going down a hill. We want to see it starting to bottom out and ultimately a recovery. We did see that in supply that we just looked at. We've already saw that bottoming and recovery. So pending sales, that measure of demand, is still trying to find its bottom. And based on the fact that demand has been so weak coming in every day, day in and day out, going back the last couple of months, we should expect pending sales to continue to fall even after we reopen. Let's not forget, first the stuff comes on the market, then the negotiations begin, then the due diligence begins, then the deals get signed, then they get in the system, and that's when you start to see contract activity and pending sales tick up. If I were a betting man, I would bet that you have to wait about 3 to 5 weeks after we reopen to start to see pending sales probably start bottoming out and that contract activity bouncing the way we expect and hope it's going to bounce when the gates reopen. Okay, let's go to the dashboard and let's do the weekly checks. Active new listings. I do the 1 week check. We came in at 253. When I did this last week, we're at 245. You're looking at a chart right now. When I first started doing this, it was at 138. Sellers wanted no part of it. It got to a low of 70 in week 5. We have been ticking up ever since. This is what you want to track. I keep saying this over and over again. If you're new to listening to this broadcast, you want to tell your clients, I'm the one that's going to show you, again, phase one, destruction, phase two, normalization, and phase three, recovery. And what we want to see is new listings coming on the market. We want to see sellers participate and be aware and say, yes, I know what the market's like. I want to list anyway. This should be in the mid 300s right now. All right. Last month, it should have been in the mid 400s. All right. So we're still low, but relatively speaking, we're seeing an activity coming back. That's what you want to see. Let's switch over to contract signs. Contract signs 1 week. Where did you come in? 56. I mean, that's not bad. That's expected, but that's down from last week. You're looking at a chart right now. We came in at 61 last week. I was hoping that momentum would continue. When we first started doing this, we're at 136, and then the demand just has been slowly going down. The low was week 12. about 2 weeks ago. So we're bouncing off that lows. Obviously, we're muddling at the bottom here. So if I was a seller, I guess I understand. You see the opening, you see the light at the end of the tunnel. We're 12 days away. Maybe you want to wait and see what happens when those gates open. So I wouldn't expect too much of a bounce in contract activity until after the gates open. And again, give it a few weeks just for the deal process to play out, and then you should start to see that coming up. But this is what you're looking for. This should be in the 200s to 250s this time of year. So you're going to see it. You're going to see it go up. Show your clients that this market is coming back in real time. This is the measure you want to look at, contract signed. Let's finally go to off market and conclude this session. Where is off market? At 115. That is down from last week. That is good. We saw a low of 83 in week 12. You're looking at a chart right now. We started at 424 back when this began. That was sellers saying, I want off the market. Off market, when that's high, that is not a good sign. That's a bad sign. So that's why we're tracking this. This is the third lever. We're looking at active listings. We're looking at contract signed listings. We're looking at off market. That's the third metric that we're looking for. And we want that to come down. We want listings to go to contract, not come off market. So this is at 115. It's coming down. We've kind of at the low. We're bouncing down. That's a good sign. So that's what I want to see. I want to continue to see that number coming down. Rest assured that we are going to be on these numbers each and every week. Until then, I wish everybody a very safe and enjoyable weekend. And again, this is Noah from UrbanDigs, and we will catch you next time. Have a great day.